Suzanna Martinez, your PEO advocate, helping you maximize your benefits without overpaying in PEO fees. And I have Daryl on the line with us. And Daryl sells insurance, and him and I do partner together quite a bit. And I'm so glad that he was able to log in. Daryl, shoot away the notorious big. What questions do you have for me? Anything PEO?
I think the biggest thing, so like Susanna said, I work in the insurance space for direct to employers, but the biggest question I have usually is why a PEO? Because an employer might come to me and say, hey, I've had ADP cover my health insurance with Humana, or I just went and bought it from a broker. The main thing to ask me is why a PEO instead of buying direct from carrier?
Okay, that's a good question. And a lot of people wonder that. Oftentimes, if the company's been in a PEO, they don't realize what the PEO is doing for them until they leave a PEO. So the big reason why companies will use a PEO is because it creates efficiencies and it streams a lot of their businesses. And basically, it gets all the different silos and integrates it into one single source solution and helps them focus on their core business. For example, if you use a benefit broker, you're going to have a Ben admin system that you're going to have to log into there. You're going to have to deal with your benefit broker. You could probably might have a payroll system, or maybe you're doing it in-house, but you got a different vendor there. You got a flexible spending account vendor, a different login there. All your ancillary benefits, you have different logins to your dental and vision and short-term and long-term disability insurance. Maybe your broker might have it all under one platform, but still it's not all integrated to employees, to your payroll and your onboarding of new employees. If you're onboarding a lot of new employees, they just need one click of a button, go do all their new hire paperwork, elect onto their benefits, see any other of the ancillary benefits that the employer is offering. If you're issuing company computers or cell phones or a car, you want to have everything all in one system so it helps as far as onboarding. And then once an employee leaves, how many times have you heard an employee has left and the employer forgot to go into the dental portal and enroll that employee, and they had to keep paying premium?
All the time.
All the time. Exactly. It happens all the time. Or if a new employee comes on board, they forgot to get them enrolled in, maybe they got them enrolled on one portion, but they didn't get them enrolled in everything else and they missed their window. And oftentimes the carriers will fix that for you, but still it's for the person internally at the company that has to manage that creates a lot of burden and doesn't create streamlines, and it doesn't create efficiencies in their business.
Makes sense to me. I see it all the time. And something else that also comes up is the industries that are best served with PEOs. Because I understand certain industries are better than others. So what would you say is the main attributes of a company that's ideal for a PEO?
Those that really want to create streamlines and efficiencies, and they're really focused on growing. Maybe they really want to get their one location and they just want to make sure that they're very efficient there, and then they have plans to open up several other locations, or maybe going into multiple states or hiring employees in multiple states. They just want a click of a button to have the PEO, whatever state they find the talent in, get the workers' comp set up, get the unemployment set up, and make sure that the benefit offering is all set up in that particular state for that business. As far as industry, I'm sorry?
No, go ahead. You got it.
Yeah, two different types of industries I typically look at. There's PEO companies that really like to focus on the white collar industries. The second are a lot of heavy blue collar companies. And the heavy blue collar companies are very workers' comp driven. Typically, they're going to be your roofers, your people, solar panels, long distance truck driving, staffing companies that do light industrial. So oftentimes there could be significant savings on the workers' comp. It could definitely help reduce their EMOD score if it's gotten over 1.0, and then just help them just have a system to be able to plug and play like staffing company. If I get a client in this state and this class code, I just want a partner to just plug and play immediately versus having them to manually go to set everything up themselves.
Makes sense to me. And what would you say when you're looking at cost savings? Because I know sometimes in my world, I get a client that'll have a 200% renewal, 100% renewal on their health insurance, and they're freaking out. What would you say cost-wise? I know you can't say exactly, but overall, when you compare PEO for an organization that benefits from it versus going straight to carrier, what they can expect on a savings basis?
It's all a crapshoot when it comes to health. And are you talking about health insurance?
Yeah, there's overall benefits, health, dental, vision, because that's something a lot of employers that are smaller kind of have to deal with, or like you said, roofers, restaurants, places like that, they got to deal with these issues, what they'd expect.
Yeah, so often there's significant savings both on the health insurance and on the workers' comp, especially if it's a high-risk workers' comp. And that savings oftentimes offsets any of the administrative fees. Sometimes the groups that I work with, there's just a significant savings overall that just offsets the administrative fees. Sometimes it's a net even, and sometimes it could even be a small investment. But companies that really want to outsource and be more efficient, they're really happy to pay that small investment. Oftentimes, though, there is savings on the benefits and the workers' comp. It's just whether does it offset the administrative fees or not. When you talk about the ancillary benefits, the benefits of joining a PEO company is that they have no minimum requirements because they're all large group benefits. You can offer all these ancillary benefits, short-term disability, life insurance, long-term disability. And if just one employee participates, that's fine. It's part of the large group. So you don't meet any minimum participation requirements. You probably know some of the products you sell, there's some minimum participation requirements.
Definitely. Okay. And then I think another question I get from employers about do they have their choice of options as far as there's several health carriers they could pick from, several dental, or are they going with the one stop that there's already chosen for them?
Typically, it depends on the PEO. Some PEO companies will just have one master medical carrier. Some will have two, so you get to pick between the carriers. And then within those two carriers, they're large group plans of the PEO. They typically have 10 to 12 plans within that carrier. So then you can pick the plans that you want, but you do have to pick one carrier. As far as the ancillary benefits, some PEO companies will just have a standard. These are our partners that we partner with for dental. They do typically have options. So they have a buy-up option, a lower option, just different prices, but typically they're different. They're the same carrier for the ancillaries, but it just really depends on the PEO company. Because I know PEO company that has 3 carriers for dental and several carriers for vision, and let the employer or let the employees decide what carrier is best for them and what plans they want to choose.
Okay, that's good to get some options. How much time between you having all these things in one spot and then the admin time, how much time do you think an employer can expect to save? We're not even an employer, the HR person, whoever's doing this. How much time they can expect to save?
That's a really good question, because what I typically try to do is when I'm talking, it depends on the size of the company and it depends on what they're doing. So I just recently helped a company. It was a financial firm and they were with the PEO. However, they were not on the master medical and all the benefits. So they had a different portal for all the benefits, and there were about 30 employees. So the time really depends on the size of the employer and what they're doing. And he was so frustrated because he would forget to add a new employee in the payroll, but forget to add him on the benefits. And then when an employee was leaving, the same thing, he would forget to terminate because there were several different systems he had to go into. And it was very frustrating for him. And he really needed to consolidate it and have it in-house. And so I always ask, how much time are you spending in this? And it really depends on how frequently they have the employee turnover, how many employees are typically hiring in a month, and how many employees are offboarding. If it's pretty frequent where it's onboarding and offboarding and the door is just turning and burning, it could be a lot of hours. This particular company, it was a financial firm, so it wasn't huge turnover, but they were having turnover every few months, an employee here, an employee there. And he said it would just take him hours to deal with that, especially if he forgot to do something and you have to backtrack. I always try to justify, really drill down with them. Like, how many hours do you think this is spending on your time? Because your time is valuable here. He was actually the legal counsel within the company. I'm like, how did you get this job? So
kind of the main reason people decide a PEO is not really so much cost initially, but more administration probably. Like
administration, absolutely. Administration and efficiencies. Yeah.
That's good to know. 'Cause I think people always think about cost at first, but they don't think about how much their time costs them to do these things. If the legal counsel's doing it, that's a couple $100 an hour.
$200 an hour. And if we talked about it, I think it was at least 5 hours minimum a month. And that's $500 a month just in his time. And if for whatever reason that month they were having more onboarding and offboarding, it's going to be more.
Yeah. What's a common misconception about PEOs? Because I know in my day-to-day, I frequently ask, have you ever heard of PEO when I talk with employers? And most of them don't. So what's some of the most common misconceptions people have about PEOs?
Good question. The most common question is they think that they're losing control of their employee. They think it's true employee leasing, and it's not employee leasing. It's a co-employment model. You're getting somebody to share the risk and liability with you. They're going to be half responsible. So if there was a lawsuit, a sexual harassment, taxes, payroll taxes were owed, there was penalties, they are sharing liability with you. So their name is also going to be on that lawsuit. And they're also, if it was their fault, the reason why the taxes were not paid, they're going to be liable to pay the taxes that were any tax penalties and fines. It's a shared risk and liability partner. They're not taking control of your employees. You handle the day-to-day operations, who you want to hire, who you want to fire, how much you want to pay. The PEO is just going to be there to make sure that you're doing things legally and compliant. Who doesn't want to do that?
Makes sense to me. Okay. And I guess the last thing is, are you able to work in every state, or is there only certain states you're able to work with?
Oh, every state. I'm all across the nation and help businesses nationally. There are some states that are monopolistic states, meaning if you go out to get a workers' comp code there, it's all based within the state. A lot of the PEO partners will manage it and help the client get those set up. Most of the state are workers' comp states, so it's really easy for the PEO company to do that. But for those other states, the PEO company will basically do the work on behalf of the client, even though it's a little bit different.
Okay, and I maybe just think of something as you said that. Would you say it's better when you have a multiple state business to run through a PEO to make things simpler for you? Like say your business is based in Georgia, New York, Texas, Florida. Would you say it helps them by going through PEO versus trying to disjoint everything?
Yeah, if they have employees in multiple states, or especially people are having a hard time finding the talent and they don't want to, let's say they found a talent in North Dakota and they're like, I don't want to get set up in North Dakota. It's a easier plug and play because the PEO, it's just a turnkey. They're already set up in every state. They can just turn it on, get the code, get the unemployment rate, get the benefits set up, all in a turnkey button. So that way, wherever they find the talent, they can go out and get it. And yes, if employers have employees in multiple states, that's typically a good giveaway. Even if it's 10 employees, each employee is in a different state, that is actually a good PEO fit because of the compliance.
Yeah, I know that's something nowadays more and more employers are going outside their borders, and that's something they don't think about is how do I manage that? So I think that's good you shared that.
Yeah. And every state's going to be different as far as your unemployment rates go. And I've actually worked with a couple of staffing companies lately. They do light industrial, and staffing companies, they're going to go wherever they find the clients. And they're going to fill the jobs wherever they find the clients. And sometimes it's not the standard workers' comp code. Sometimes they're a little bit different. And they really need a partner to make sure that they're set up in the state properly and in the right workers' comp classification code as well. And not lose a job because of it. Oh no, I got to go get set up. But time could pass and then the client has moved on to a different staffing company to fill positions.
Okay, and then also, does that mean there's a certain size you work with? Like, what would you say is the starting size for saying, hey, you need a PEO? What's the starting size for that?
We work from anywhere between 5 employees to 500 employees. A good average of companies that are with the PEO are probably 30 employees. It just really depends, but typically they're small employers, privately held.
Well, you schooled me. It taught me some PEO stuff today.
Yeah, I know you and I have known each other for quite a few years now, and sometimes people just forget, what does a PEO do again? Because even though you're in the insurance business and you do a lot on the insurance side with working with employers, a lot of people just really forget what is a PEO and what exactly are they doing for businesses. So I'm glad you were able to jump on and ask questions away, Daryl. I appreciate it.
No problem. I got your back.
Thank you. Oh, before I stop recording, Daryl, why don't you tell us a little bit about what you do? We have plenty of time. Not everybody is a PEO fit, and not everybody is going to be a fit for all the benefit side. Daryl, why don't you tell us what you do and how you help your clients in the insurance area?
Yeah, good question. Two main sides to my business. The first side is working with employers to help them find a benefits package that fits their budget and needs. Usually starting at 2 employees up to a couple hundred, but the average is probably like 15, 20 or so, smaller businesses. And the other side is for the individual. When people tell me I'm worried about my 401k or I have no retirement or life insurance, I help them make sense of that with the several options for life insurance, just because it is called life insurance, not death insurance, and teaching people how to use it while living.
Exactly. And do you do a lot of term life, or do you do a lot of whole life, or do you do both?
A combo. So basically for me, term is going to be for covering a time period or liability. So I'm talking to my young families that have kids that still can't work for themselves, or they have a mortgage they got to be responsible for the next 20, 30 years. We'll do a term just for that reason. But I try my best to never have a client only have term, just because that term might run out and they forget to call me before they turn 80, and then they're like, hey, I need life insurance, and it's too expensive because of the age and their health. So whenever I get a chance, I call it stair stepping. We'll have one step as a term to cover those early years, and then the next step is your permanent policy to cover whenever that happens. Because oddly enough, my father, military guy, he didn't believe in life insurance. I didn't find out till a couple of years ago. But a good thing was my mom passed, but we was covered for her. Like, he had money for her, so the money wasn't a problem, but it was the thought process. He said, hey, I didn't believe in life insurance because I thought it was a gamble. And I was like, what do you mean, Dad? He's in the military. They showed me a policy. If I died in 30 years, y'all would have got paid, but that's all they showed me. That's not a gamble. That's a gamble, but all of us die. So maybe
we
you
just
saw the
don't
wrong
know when
guy.
we're going to die.
He didn't see the right kind of insurance. He only saw a term. So he never heard of permanent insurance. I didn't know until he's 65 now, but I didn't know until 2 years ago that he never heard of permanent insurance. So a lot of people go through that. They get their insurance through their job, and they're like, well, boss told me about this. Boss said to get this, so that's what I'm supposed to get. But they don't know what everything else is out there. So that's my mission, is to teach people about that. GoFundMe is not insurance. Fish fries is not insurance. Car washes is not insurance, and people always got to deal with that. I'm glad you asked that. People are very ill-informed on life insurance.
Yeah, I'm a big fan of buying whole life. And that is one thing that the PEO typically does not sell, is whole life. Oftentimes, they're very inexpensive group policies. Oftentimes, the employer can buy it really dirt cheap, even if it's just a small minimum for the employees, and then the employees can buy up. Oftentimes in the PEO space, to buy up into those policies, there's no underwriting. There's no question. They don't look at doctors. So to get very inexpensive term insurance with not having to go through any of the underwriting is absolutely wonderful. But you don't know how long you're going to be working at that employer, and you don't know when you're going to die. I always think it's best to have both. And I'm glad that you work with your clients and doing a stair stepping, because sometimes they just can't afford it all at once. But if they can just start smaller, have some whole life, and move up over time, I think is pretty fantastic. Because gambling, like, we all know we're going to die. We just don't know when.
Yeah, absolutely. And that's why that get what you can, whatever you can afford. I'm not the guy saying buy the most expensive policy, so let's put your budget. Because I think about when you get to retirement age, I don't want you to say I can't afford the policy and drop it, or it wasn't funded enough by the time you retire and you got to have a second job just to pay for your life insurance. There's several options, usually whole life, index universal life are great, or sometimes an annuity. If somebody says, hey, I'm just making sure preserving my money because the market's crazy, they might buy an annuity. I just take my time with them to explain everything. I'm the insurance nerd in my family, the only one. They ask me questions about stuff like this, so I try to be that resource for my clients as well.
That's wonderful. Everybody needs those resources, because it could get very confusing and pretty complicated. I think if I remember correctly, there's some policies out there that it can turn into long-term care, or like a disability policy. You could use the benefits differently besides just death benefits. Is that correct?
Correct. Yeah, pretty much every life policy I write when it's permanent will have a chronic illness rider, which will either say if you can't do 3 to 6 activities of daily living, it might be you can't feed yourself, you can't bathe yourself, maintain conversation. But it used to be if you can't do 3 of those, or it could just be a diagnosis. Like I had a client that got diagnosed with cancer last year. She used her death benefit while living to take care of paying the mortgage, paying for out-of-pocket network expenses, and things like that. I'll never sell a permanent policy without that built on. Term is optional. Like, term is an option, but permanent, that's always a given. I'll just tell you, you're going to want to have this because that way you preserve your cash value. You're using your death benefit while living versus your cash. So that way you don't work hard to build this nest egg up and then need it because of a diagnosis. So if you use your rider while you're living, that'll just touch your death benefit, but your cash stays where it was, which is what the wealthy do. If anybody listening to this ever watches college football, head coach at the University of Michigan, Jim Harbaugh, he asked for permanent life insurance for his retirement plan. So he gets $14 million for 7 years in the form of life insurance, not in the 401k, not in an IRA. He chose life insurance. And the reason he chose that, because obviously he's worth a good deal of money. It also preserves his family, because 401ks don't pass down tax-free. IRAs don't pass down tax-free. So you got to think about those kind of things.
Yeah. And then the money is just compounding tax-free. And it's one of the little secrets that a lot of the wealthy people know about, but the regular people don't really know about. So if you want money to grow tax-free, that's a great avenue.
Oh, yeah, absolutely. I think the reason it's not known, because banks do it, but banks don't want you to do it. A bank would much rather you get a HELOC from them or a second equity line of credit from them instead of using your life insurance. So Suzanna's absolutely right. Anybody wealthy, if you ever got them to a cocktail dinner and asked them, like, hey, how did you get this money, or do you have any life insurance money? They'll all tell you yes, because it's something that the tax code is made to help life insurance part of it. It's about 7 parts of it that were beneficial to life insurance. So if you think about that, for other people that see, well, why does Dave Ramsey say don't do this and do that? He works for a bank, unfortunately, so he's going to think of his boss' best interest. But if you look at anybody, well, people tell you, no, I got 5 life policies, I got 10, just because it's a guaranteed payout, it's tax-free, it grows tax-free, and it has that chronic illness. So it's really, the only downside is if you get the wrong information. If somebody tells you to buy something that's not right for you, that's the only downside. But I take my fiduciary responsibility seriously, just because my first death claim was 9 months after I got my license. I wrote a policy, and then 9 months later, the owner of a daycare, his son got shot, wrong place, wrong time.
Oh, no.
Yeah, good kid. It was on First 48, though. It was on an A&E show, First 48, because they couldn't figure out at first. And ever since then, I take it very seriously, life insurance, because I don't want you to see me in a grocery store and then say, what the heck did you sell me? So I make sure it's something that if I see you, you'll thank me. Thank you for that. Thank you for this. I want this to be something that 20 years from now, 30, 40 years from now, you're happy you made that decision.
And it's still in force.
Yeah, absolutely.
Yeah. Awesome. Well, thank you so much for sharing some information about you. Is there anything else you would like to add?
Nope, I guess just follow me on LinkedIn, the Notorious BTG. That's me on LinkedIn, the guy rapping and talking about insurance on LinkedIn.
Did you change it? Because it used to be the guy with the bow tie.
I have two nicknames. A follower gave me Notorious BTG. The guy with the bow tie came from out cold call people, and they couldn't see me. And they say, how will I know who you are? I'll be the guy with the bow tie.
Oh, the guy with the bow tie.
Yeah, my partner heard that and said, that sounds good. You should make that a thing. I'm like, really? Yeah, make it a thing. Like, all right, whatever. And then doing that on LinkedIn so frequently, a follower one time heard a rap I did. And she said, oh, Notorious BTG. And I'm like, bow tie guy, I get it. And she made me the name. So I wish I could say I had a think tank and a marketing team help me think of it, but it was all accidental.
Oh, that's awesome, Daryl. I'm so happy. I'm so excited that you were able to log in. I certainly do appreciate your time.
Suzanna Martinez here, your PEO advocate, fighting to maximize your benefits without overpaying in PEO fees. If you like my content, please hit the like button and subscribe or comment below.